It might seem obvious that Tesla, the company, and Tesla TSLA, the stock, are different entities, but at the same time, it also might seem obvious that they're highly tied together. And I think it's worth exploring this in a little bit more detail. Let's take a look. Hey y'all, it's Dr. Know-It-All. So I decided that I was going to wear my Tesla annual shareholders meeting shirt. I don't know if you can read the back of that. Anyway, there's dog fur. There's always dog fur on everything in our house. Anyway, so I thought it would be a good idea to wear this shirt in particular today because I want to talk about Tesla versus Tesla, or Tesla versus TSLA. Anyway, I think it's important for us to really think about whether it matters that Tesla, the stock, has crashed so badly over the past, 12 months basically. 2022 has been a really rough year in terms of Tesla stock. And, there's been an awful lot reported about that. Stephen Mark Ryan just did a video this morning where he talked about it being down 73%, I believe. I mean, obviously it varies a little bit, but it's down a huge amount from its all-time highs. And the upshot of that, of course, is that people are completely freaking out in the stock market. And of course, it's also worth noting that I actually looked at my portfolio on E-Trade yesterday, and in total, so I started purchasing Tesla stock in April or March. I think it was March of 2020. So I started purchasing then, which I know is way too late. But anyway, that's when I started purchasing, and I've been purchasing over time since then. But my Tesla shares are actually in the red right now. They're not even in the green anymore for all of them all together. And of course, it's worth pointing out that I am not a stock analyst or a stock advisor or anything. So all of this stuff just take as the ramblings of a madman, as Tom Nash likes to say. So anyway, first of all, what's happened to Tesla stock itself? Well, obviously, it was affected by macroeconomic trends. We had a huge bubble going into 2022, just in general. You can see cryptocurrency, all the kind of growth stocks and things like that were way up and potentially overinflated at the time. And, you started to have a bunch of bad things happening, including the war in Ukraine, parts shortages, things like that, all sort of came to a head in 2022. And then you layer on top of that, specifically for Tesla, that Elon Musk went ahead and put in an offer in April for Twitter. And that really seemed to start a major downfall in Tesla's stock price. And obviously, Twitter is not Tesla, but people were really equating these two things. And the stock market, at least in the short term, is kind of a momentum deal. It just seems to operate on if everybody else is doing it. It's like a bunch of lemmings or something. It's like, if everybody else is buying, then you buy. If everybody else is selling, you sell. And by the way, I think, is it Warren Buffett that said this? But he said, when everyone else is fearful, you should be greedy. And when everyone else is greedy, you should be fearful. So at this point right now, what I'm trying to do is scrape together any cash I can. It's a little difficult. One might argue that instead of going to Hawaii, and spending a bunch of money there, we should have invested all of that in Tesla stock. I'm getting old enough at this point in my life that I'm like, I really want to experience things before my health starts to decline and things. And so I would rather spend the money and enjoy the activities and the ability to do things right now over amassing some hypothetically large amount of money. Again, it's all hypothetical, especially in the stock market. And we're going to get back to that in just a second. But anyway, as I'm able to, scraping together a few $100s here and there and buying another couple of shares of Tesla as time goes on. Again, just what I'm doing. I'm not suggesting this as a strategy or anything. Elon Musk very recently just said, in fact, I think it was on the All In podcast, he said, he said that he would personally avoid margin calls at this point. And I have always just been like, if I have the cash that I don't need right now, I buy stock in whatever company it is. I mean, I have Apple stock and stuff like that too. But anyway, I purchase the stock as I have the money that I don't need, because I know that I'm going to have to sit on it at least 10 years to have a reasonable expectation of increased outcome. But of course, in the short term, Tesla stock has declined nearly 3/4 from its all-time highs, which is just kind of ridiculous. And I haven't even checked this morning. Maybe it is 3/4 by now, or maybe it's gone up 10%. Who knows? Tesla stock is exceptionally volatile, but it does seem to be in a major sell-off right now. One interesting thing I found out, the Electric Viking just reported on this morning for me. Maybe it was yesterday when he actually did the video, but he said Cathie Wood and ARK Invest have invested heavily in Tesla recently. So they are still very firm believers. And I think they believe that Tesla is on major sale right now, as do I, honestly. I just don't know how the forward PE of Tesla matches, basically. Looking at Pepsi, Coke, Chipotle, I don't know about Walmart, but I know that they're about the same market cap as Walmart. But anyway, you've got this amazingly powerful, world-changing technology that's going to be going out in a bunch of different areas besides just automobiles, and it's being valued at the same as older companies that are slower growth companies. So that seems pretty outrageous, and it really does seem like, in terms of price to earnings ratio and things like that, that Tesla just has to go back up again. Again, not advising anybody to buy or sell or do anything like that, just telling you what I'm observing. And now let's take just a quick sidebar about what stocks actually are. And I think it's worth remembering this a little bit. When you purchase a stock, and it used to actually be like a piece of paper or something, right? I've got a Post-it note here, but you used to actually get a certificate. That doesn't really happen anymore. Nowadays, what it is just an electronic ledger. And I know this because I actually have a company. I have shares in that company. It's a private company. And if you want to invest in the company, you're always welcome to. Just get in touch with me about that. But anyway, it's a private company, but we do have shares, which means I own a certain percentage of that. And anybody who invests in the company owns a certain percentage of that company. And so even though I just have a tiny, tiny amount of Tesla shares relative to the giant total that are out there, I own a little piece of Tesla. I own, a part of a Model Y that's being run off the production ramp right now, or something like that. A piece of the factory, if you want to imagine. So it's worth remembering that the stock market is not just completely imaginary. Yeah, it's kind of crazy the way people pump up and down the amount of money that you can invest in things, but ultimately it is tied to an actual company. It's a piece of that company. So if you had hypothetically 1,000 shares of a company and you owned one share of that, you would own 1,000th of that company. That's profit, loss. If they go bankrupt, you're out of the money. If they produce things, ultimately you should be getting some sort of return on that because you do own a piece of that company. Which now gets us to Tesla, the company. So this is the place where I think a lot of disconnect has come between reality and what people are thinking. So Tesla obviously produces automobiles, right? And that's what most people value Tesla on. But beyond that, they are currently producing 4680 battery cells, and they're purchasing battery cells from others and packaging them up into packaging. So they're also a battery manufacturing and packaging company. And by the way, the 4680 battery cell ramp is now up to about 1,000 vehicles per week, which is really good. They have a long, long way to go, but hopefully they're figuring all these little things out. They've got a lot of ramping issues that they've run into, as is very common when you try to scale up new technology to new things. The biggest thing with 4680, the new technology that they're having issues with, is the dry anode process. I believe that's my understanding of it, at least. And I can actually do a video on that if people are interested, so definitely let me know. But anyway, they're running into problems. That's a very, very new technology that really hasn't been done at scale before. And so Tesla is right there at the forefront, and they're having issues, but still they're up to 1,000 vehicles a week of production rate at this point. And of course, Tesla is purchasing batteries from lots of other companies and Panasonic, LG, et cetera, et cetera. So anyway, they're producing a lot of battery packs, and they're putting those into vehicles, and they're able to produce millions of vehicles per year now. Then beyond this, of course, Tesla is an AI/software company. So they're not only producing things like full self-driving beta and stuff, which is very, very public and super cool, and it's amazing. And obviously it has taken way longer than people wanted it to take for it to become a reality. I'm sure none more so than the people who are employed at Tesla and really want this to be a fully functional thing that has regulatory approval. It's just taking a long time. And by the way, touche to GM and Cruise for pushing out their full self-driving vehicles in Austin, Texas. I think that is it's a little bit of a cheeky move on their part, and maybe I'll do a whole episode on that. But anyway, Cruise is a very, very different beast than is Tesla's full self-driving, and it's worth exploring that again in some detail, but I'll leave that alone right now. But anyway, very cheeky move. I approve of that, just for the fact that I think it's kind of amusing that they're doing that. But I have a feeling it's also getting Tesla and specifically Elon Musk's notice, and he's probably not going to be happy about that. So probably they will redouble their efforts at this point. So anyway, they're an AI and software company, but not just in that sort of public realm, but also the entire factories, all of their factories, and I assume all of their back-end logistics, all of that kind of stuff is run on their own software. And a lot of that is AI based, but a lot of that is more traditional software as well. So they're certainly certainly a software company, and that means that they have access to software like margins, just in the fact that they're doing subscriptions and things like that. I'm paying $10 a month for premium connectivity. A lot of people are paying $200 a month for full self-driving access. I paid upfront, of course, which means that, they recognize that revenue over time. But anyway, that's very high profit margin revenue, as opposed to vehicles, which tend to be lower profit margin revenue because they're very large and complex things to build. So there's a fixed cost in building them. There's not a lot of fixed cost in pushing out another copy of your software, just the cost of transmitting that data. And then, of course, Tesla is an energy company on top of all of this. So they produce batteries, they package batteries. They don't just do that for vehicles, but they also do it for power walls. And then on top of that, they also create solar panels and solar roofs. And so with that, they're actually in energy production as well. And that's a whole other arm that, again, is relatively small right now, but could grow by leaps and bounds over the next decade. And finally, Tesla is a gas station. They have their supercharger network rolled out, and they're pushing really, really hard to make it as ubiquitous as possible by licensing it out to other auto manufacturers, and also trying to make, at least in North America, the Tesla charging connection port the standard in North America. And if you think this is a nothing burger, just imagine if GM had GM gas stations, right? So it's the same sort of thing that happened back with movie theaters, except in reverse, was that movie production companies in the early days, like in the 30s and I think into the early 40s maybe, or maybe it was just a little earlier than that. But anyway, I'm hazy on exact dates, but they used to own their own theaters. So if you wanted to go see movie X, you'd have to go to company-wise movie theater to go see that. And then eventually there was kind of anti-monopoly stuff that came in, and the movie theaters were created as independent entities, which could then purchase from multiple different kinds of production companies. But you're looking at a situation like that with Tesla. I mean, again, just imagine if you bought a GM vehicle, if you had to go to a GM gas station. Now, you obviously don't have to go to a Tesla supercharger, but what Tesla's done is they've made the experience so much better than any other charging network that people choose to go there. I pretty much don't charge anywhere else if I have the choice, because the other experiences are a bit of a pain in the butt, and a lot of times the chargers are broken, etc. And Tesla superchargers, especially on a road trip or something, it's just so easy. It's just fire and forget. You do the navigation, it tells you where to stop, it does all the stuff. You don't even have to worry about money or anything like that. It just takes care of all of that kind of stuff. So anyway, this is a situation where you've got an incredible amount of momentum in this charging network. Again, they're recreating the whole gas station network of the countries that they're in, and really nobody at this point, except maybe in China, nobody's really competing with Tesla at this point. So you've got Tesla rolling this stuff out, and eventually they could become the world's, again, gas station, but their charging station. So this could be the de facto place where you want to go if you want to charge. And I don't think Tesla is going to run into monopoly issues, because of course there are other options, but their option is so much superior to everybody else's option that people are going to choose to go to Tesla as much as possible. So if you own Tesla shares, TSLA, then you own a piece of all of these companies and probably more things underneath. I guess I haven't even mentioned Optimus at this point, because that's not a product that this is actually out yet. I was trying to keep it in just the realm of things that actually exist at this point. But within the next couple of years, it's quite possible that at least in Tesla factories, and very probably in other factories as well, you have the possibility that you could purchase a Tesla robot as well. And companies may be first, but us normal consumers later. But anyway, even if it's just companies that are purchasing this, again, us Tesla shareholders are a piece of that. We own a piece of that company as well. And then, of course, if you want to roll out the semi-trucks as separate entities from consumer vehicles, you've got that, eventually potentially vans, et cetera, et cetera, et cetera. So anyway, Tesla, as Elon Musk has often said, is a number of startups all rolled into one package. And if you look at all of these companies rolled up together, they are really, really valuable. There's a lot of stuff. The one that's got the highest profit margin, of course, is the software as a service sort of thing. And eventually we might get to transportation as a service. I hope we do, which means that you'll have robo-taxis out there, which is a whole other source of revenue, a recurring revenue stream that Tesla can tap into. So all of this stuff means that Tesla really should have a higher valuation, P to E valuation than it does, because it's not just an auto manufacturer. Everybody who says Tesla is overvalued versus their PE is talking about versus other auto manufacturers, not versus software companies, not versus robotics companies, not versus giant manufacturing companies, not versus energy companies, not versus battery companies, right? It's just crazy. They're not valuing all of these pieces of the puzzle. So there really does seem to be a very large disconnect between the stock price currently and Tesla's valuation as a company. So why is this the case? I think number one, again, is just momentum. The stock market is really not very rational. If you think the stock market is rational, you're crazy, at least in the short term. Eventually, this stuff will all work its way out. But in the short term, the stock market is incredibly irrational. Again, like I said, lemmings. If everybody's buying, you buy. If everybody's selling, you sell. And I don't know why that's the case. It doesn't make any sense that that's the case. You should always look at the fundamentals of a company. Again, remember, you're not just buying stock to like absorb money or something like that. It's not a nothing thing. It's actually part of that company. So what do you think about that company? If you think that this company is undervalued, then it seems like it's a good idea to buy that stock at this point. Again, hypothetically, I don't want anybody going out and buying or selling based on what I'm talking about. But it's something that you should look at as an investor. That's the thing you need to look at. The second part, of course, is that a lot of people are not investors, they're day traders, which means that they're just in there, churning as fast as possible. So you buy something, if you make 20 cents a share on it, you're happy because you sold it in a day. So you made a small amount of profit, things like that. And then of course the government loves to eat that profit up because they're taking very large chunks of that because you're doing day trading. But of course, the way that I think about all this is very, very different. I think about this as decadal stuff. You purchase a stock and then you assume that you're not going to sell it for at least a decade. That's the kind of thing that I do. And, there have been things like liquid metal. I purchased a bunch of shares of that years and years ago. It's not worth anything anymore. So I've made huge mistakes. Ultimately speaking, I think it was $300 that I put in, and now it's worth about $50. So, whatever. I didn't lose that much, but percentage wise, I lost a ton on that particular thing because I thought that they were going to be in bed with Apple and they were going to be making a lot of money on that front. So anyway, it seemed like a good idea at the time. It seemed like a good company. It didn't work out. But in the meantime, I've made good bets as well, particularly on the Apple front. I've made a great deal of money percentage wise. I think even with everything going down right now, I looked at my E-Trade account yesterday and I was up 500% on Apple. So, that's not bad. I'll take that. And I've owned it for a very long time. So it really doesn't matter what it does right now because it's always kind of trending up. So anyway, you've got a disconnect, obviously, between the value, at least in my mind, between the value of Tesla stock and the value of the company. And what that means is that if you have the patience to sit on Tesla's stock, TSLA, for the next 5 to 10 years, then you should be rewarded. It is very unlikely that Tesla is going to go bankrupt at this point. They're making good money. And that is the other reason why Tesla would care what their stock price is, because if they have to go to the public markets and they have to say, hey, we need more money, more cash right now, then the value of their stock really matters, because if you have to sell some stock or create new stock in order to make some money for the company, then it really matters what your stock price is. But right now, Tesla's in a situation where they have plenty of cash. They don't need the money. They're sitting on a mountain of cash at this point. And so they don't particularly need to care about that, at least from the company standpoint. But there are other really, really important aspects of this. Number one is the sort of visibility or the optics of the whole thing. You don't want your company looking like it's junk stock status, right? You don't want people associating the company with a badly run, poorly executing company. That's just embarrassing. You don't want that. Beyond that, it's really, really important for recruitment of talent and retention of talent. So this is a kind of thing where Tesla really needs to worry. I meant to talk about this in the branding episode I did, and I'll put the link to that up here if you haven't seen that yet. But I never ended up talking about that, and I regret that, because one of the big things about having a brand that's tarnished and having a lower stock price means that your brand is in a way tarnished. Again, regardless of what the company is like, but having a tarnished tarnished brand means that people are not as interested in working for you anymore. And Tesla, needs the best employees. They need only the best, most motivated employees, and they need a lot of them, which means that they need to have a reputation that people will want to work for the company. It will be really interesting. It's been SpaceX and Tesla that have been the top two companies that engineers in at least Europe and North America have wanted to work for years. It will be really interesting when the next survey is published whether that's true anymore. I predict at the very least that SpaceX will be on top this year as opposed to Tesla. But that's a really important aspect. You really do need to be able to recruit the most talented, most motivated employees. And if you have a tarnished brand and you have stock that's lower or something, that means that they're going to be less likely to come. As far as retention is concerned, you also have that problem, right? If people are working for this company and not making the best salary in the world, they're depending on the stock options that they are able to get to make up for that so that they over time will amass a good deal of wealth and be happy to continue working there. And if they purchased a bunch of stock at $300 a share or something and now it's worth $100 a share, that's not going to make the employees very happy, which means that retention could get more difficult. They might move someplace else, an easier job where they might be able to get more remuneration immediately and still be able to purchase stock as well. So it's a big deal for Tesla that their share prices are low, mostly because it's an optics thing. It makes them, it's kind of embarrassing to have a really, really low stock price. But again, everybody else is getting hammered right now too. So that's the kind of nature of the beast. But more importantly, it's recruitment and retention of employees that could be suffering because of this. Now, again, we don't know what's going on internally with Tesla. I don't know anything about their hiring and stuff like that, but I would think that this is a problematic situation right now. And in my mind, that's the most important aspect of Tesla's stock price being low. Now, as a new employee, maybe it'd be great because it's like, oh, great, I can come and work for them and I can purchase this stock really low. And the expectation is it's going to get much, much higher over time. But you could also see employees going like, why has the stock price cratered over the last 12 months? Why is it not up higher? Why would I want to come work for you when I could go work for another company or something? And again, remember that Tesla's competing with the best of the best out there. So they need to, they need to be able to show their A game as well. It's not just the employees looking to work at Tesla, it's Tesla working to recruit the best employees. So again, in my mind, that is a really important aspect of Tesla versus Tesla. And I think it's really important that Elon Musk in particular, he's the CEO of the company, and one of his primary, goals or jobs is to make sure that investors are happy because those are the people who collectively own the company. And currently, he's not doing the greatest job in the world. He seems to be focused much more on Twitter than Tesla right now. He says he's going to make it up to everybody over time. And he also said that he's going to quit as CEO of Twitter once he finds somebody else to do it. But in the meantime, it's definitely hurting the whole situation. So of course, I'm a huge fan of Elon Musk, but I do think he may be in a little bit too deep right now and needs to kind of extract himself. And again, it might have nothing to do with his personal ability to do the jobs that he needs to do, but it has to do with optics. And if you can't keep the Tesla stock price up to a reasonable amount, or at least stop the bleeding, then you really need to consider what it is that you're going to do to correct that issue. So again, I personally don't care about what the stock price is right now. In fact, I actually kind of like it because it makes it so much easier for me to buy shares. I tend to buy only whole shares, not fractional shares. So it's much, much easier at $110 or something like that a share for me to purchase shares than it was at $1,000+ a share. So that's great. I appreciate that, but I also understand that it's really important that they, level off and start to increase the stock price again over, the next 3 to 6 months or something, so that they don't freak people out, that they make the potential employees and current employees happy, and that they make the stockholders happy, and that the company has more run rate, more room to grow over time. So those are my thoughts on Tesla versus TSLA. Let me know what you think in the comments. I'd be happy to know, and maybe I've missed something that's really, really important. Maybe you completely vehemently disagree with me. Definitely let me know, but make it constructive, of course. In the meantime, if you enjoyed this episode, please do like it so that other people can find it. And of course, consider subscribing for more of this kind of content. As always, a huge shout out to my patrons on Patreon. Thank you all so much for your support. I truly do appreciate it. It's been a wonderful 2022, and here's hoping for an even better 2023. And if you want to join the club in 2022 or 2023, just check out the link in the description. And if you're interested in a whole bunch of really cool merch, check out our merch store. Link is in the description. We have Tesla Bot t-shirts, the Tesla meme t-shirt, Success is a Possible Outcome, 4680 battery cells. All of that stuff is on t-shirts, mugs, tumblers, and on. So check it out. And for those of you interested in investing, check out WeBull, an amazing platform for buying and selling stocks, and now cryptocurrencies like Bitcoin, Dogecoin, and others. Open an account and get a free stock valued at up to $200, and fund your account and get another free stock valued at up to $1,600. Check out the link in the description and help the channel at the same time. Thank you. And finally, don't forget we are both Tesla and Amazon affiliates. If you look in the description, you can see how going shopping for a solar roof, a power wall, or anything on Amazon helps out the channel. In the meantime, I'll see you in the next one. Bye-bye.